GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. We are here to make sense of an on-chain world in constant transformation. I'm Kyle Reedhead, your host for today's episode, and today is another episode of Market Watch. But today is a little bit different because it's the holidays. We in the end of the year. I am going to do an overview of markets over 2023. The reason we are going to do this today is we want to understand where things came along over the year, how things went, why things went the way they did. I'm going to help kind of back that up with some charts, talking about macro analysis, etc., as well as some industry stuff. And we'll look at where things went over 2023, and this will set us up to understand where are we at right now and what should we be looking for the new year. Now, I'm not going to go far into 2024. That's for next week's episode, so make sure you check out Market Watch next week as well. I'll dive into that, but we're going to cover everything that happened in the crypto market over this year price-wise. So not looking at news and stuff, we've already done that. There's already an episode you just listened to there. Today, we're diving into markets. So if you're an investor, this is the episode that you want to listen to. A couple things before I get started. One, if you like this kind of content, if you like the Market Watch stuff, if you appreciate this, please subscribe to our channel and if you are on YouTube, please leave a comment as well. That really, really helps. If you're listening on the podcast, subscribe as well there, or follow, I think it's called, and make sure to leave us a rating. This really helps to grow our reach and help Web3 Academy become bigger and bigger and bigger so we can keep giving you the content you desire. Okay, guys, this is going to be a great episode. We're going to be talking about Solana, Bitcoin, Ethereum. I'm even going to end this episode off, so make sure you stay to the end. I'm going to talk about, is Ethereum dead, and what's going on with Ethereum? Where's that going to go in the coming short-term future? So we'll dive into that. Okay. Before we get into that, let's take a quick second to hear from our sponsor.
Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early.
All right, guys, we are back and we are talking markets. Let's just look at the crypto total market cap to get things started. I've got charts up on the screen, so if you're listening, that's all good. I'll explain what's going on, but I'd recommend you watch this episode. It's going to make your life a lot easier. By the way, I'm recording this on December 22nd, so a few days before you're actually going to get this. Some things might change a little bit in the market, but I guess the market's going crazy in December, so maybe a lot will change by then. I'm not sure. But either way, we're looking back on markets and only talking a little bit about where we're at now, so it's not going to affect too much. It's still going to be good for you to understand. We started off this year around $750 billion in market cap in the crypto ecosystem. We are now sitting at 1.61 trillion. So we have more than doubled the market cap of crypto just in 2023, which to me is still early stages of the bull market. So it was a massive year, no doubt, but I think we have much bigger things to come. That's why it's so important for you to understand where we are at right now. The biggest moves of the year came very, very early, January, February. We had a bit of a dip in March, and then we rocketed up again throughout April. And then it was sort of a tough summer and even bit of fall where we sort of just hung out, didn't do much, even went down, I guess, over time not until really November did things really pick back up. So it was a good pump early in the year, but it was off the lows of the entire cycle. So it didn't feel that exciting back then. But then it was a struggle for about 6 months, and then things really took off. And I want to break down why those things happened, because actually at Web3 Academy in our pro, we called both of these market moves. And we called it in Bitcoin, we called it in Solana. And so I just want to walk through how we came up with that so that you guys can understand where things will go next and how we can be thinking through this. So as I've talked about so much this year, a lot of crypto revolves around macro. And the reason is liquidity is what's driving everything. And so I'm going to first just talk about a few macro things, and then I'll sum it up with why liquidity matters and what's happened there. But macro really has driven everything. And so if you didn't understand macro, it's really hard to understand what's going to happen with crypto. Remember, most people this year thought it was going to be another bad year just like it was in 2022. Most people thought we were going lower. It was going to be a rough year. But there was a few people calling, hey, this is going to be a really good year. You want to be allocated. We were one of them. And that obviously was the winning bet, thankfully. So what happened? There was two big things that really moved the markets. At the beginning of 2023, we were still in a time where we were increasing interest rates. Inflation was still high, unemployment low at that point. So there wasn't really any reason to be printing money or to be lowering interest rates. And that's why everyone thought, okay, this is still going to be a tough market and prices are going to go much lower. What I saw, and I think some others saw, was we reached the peak in the beginning of this year, or really the end of last year. And what I mean was we reached the peak in inflation. That was a little bit at the end of 2022. And although inflation was still high, the rate of change was now going the other way. We were now heading downwards. A lot of people thought this was going to remain and we were going to stay high, but it was pretty obvious that we had come so far the opposite way and so high that we shot up so high so fast, we were going to mean revert and come back down. And so we sort of hit that peak at the end of 2022, which gave me the reason to think, okay, well, inflation's likely going to come down from here. Will it go all the way to what the Fed wants at 2%? Not sure, but it's likely to come down from here. That should help with things. I don't think the interest rates change, but we should be coming down in that sense. And this is what happened. I have up on the screen here CPI, which was at 6.5 at the beginning of the year, and we're now sitting at 3.1. So it's been cut by more than half. If we look at core inflation, which is probably a little bit more important, that was really the peak, was 5.7 in core inflation, which was basically December. And we've been basically down only ever since, now sitting at about 4%. So on the inflation side, that was one thing that really helps to alleviate markets. And because the peak turn was right at the end of the year last year, that was the one signal that, hey, we've reached the peak. Now it's time to start thinking about the future. Where do things go next? If inflation has peaked, well, then it's at some point, interest rates are going to go down. And so I think that's what markets sniffed out and was one big reason for the catalyst that we saw. If we look at interest rates, the thing that I think confused a lot of people is interest rates continued to go up in 2023, right? We're now sitting at the highest they've been. They have not gone down. Yes, we just recently got the pause. And so that was what we termed the pivot. It hasn't gone down yet, but of course the pause was a bullish move. But the key thing is not about pausing or going down. It's again about the rate of change. And the peak of the rate of change happened at the very beginning of the year, right? This was the catalyst that I saw that was like, oh, this is it. So in 2022, we were raising interest rates by like 75 basis points to 1% every single month. Like it was going up big time. You can see on this chart, these big moves every single month, right? That is extremely bearish because they were getting bigger and bigger, right? We in April here, 2022, small move upwards in interest rates. And then it was like, whoa, we got to go bigger and then bigger. And it stayed these big moves each time. That was really bad. And then at the end of the year, in January, the first move was smaller than the previous move. That was the first time we actually went. We didn't go down in interest rates, but we didn't raise it more, right? We actually raised it less. That's the key thing. And that, to me, was the first inflection point for this. Again, it wasn't peak of the interest rates, but it was peak of the rate of change of interest rates. And that was the signal. And I think most people missed that. But the moment that happened, that's when markets went crazy in January, is because, again, we didn't peak on interest rates, but we peaked on the rate of change. And that was really, really key. And then again, coming into the end of the year here, we did the same thing. This was the next inflection point, which was the pivot. Now, again, they haven't lowered interest rates. That'll be the next inflation point at some point in 2024. That'll be the next big move in markets. Doesn't mean we don't have movements throughout there. That'll be the next big one. But this one here was now they're paused and they remained paused. What everyone thought, and the reason the summer was so bad for markets, I'll just go back to our total crypto market cap, was so bad is because we had that rate of change, markets went up, but then everyone thought, oh, we're going to stay higher for longer. That was the big thing. And it's because we also had that inflation peak back up in summer, We went all the way down to 3 on inflation and CPI, but then it jumped back up to 3.7. And that scared everyone. It was, oh, we're going to stay interest rates for higher for longer, and inflation is getting worse. But if we looked under the hood at core inflation, we saw we just continued to go down. And if we also understood that they can't keep raising rates, which we'll talk about when we get to liquidity, then we knew that that was just a bluff and it wasn't going to happen. And we were calling that for most of the summer, saying, guys, this is not true. This is not true. So anyway, we've remained paused. They said they were going to raise 3 more times back in June. They never did that. They raised once. And now they're saying they're no longer raising and they're going to lower in 2024. So it was a bluff, just like we thought. And that was the inflection point for markets to move so much. The other thing we can look at that we've been tracking a little bit is the Dixie. The Dixie is the US dollar compared to other fiat currencies. So we can see that over the year for the Dixie, so the US dollar, of course, if the US dollar is going down, typically that's more bullish for risk assets. If it's going up, people want to be holding treasuries. They want to be holding the US dollar because it's stronger. And so we kind of had this up and down throughout the year. So not much change there. But really what happened was in the summer, when everyone thought rates were going to stay higher for longer, we went on this like bull run of the US dollar, right? It went from 99 all the way up to 107, okay? And so that made it really tough for markets to go up. And so what happened though was once we started to realize in October that, oh, they're actually probably bluffing and oh, inflation is continuing to go down in the core side, people realized, uh-oh, I'm in the wrong assets. I need to be in risk. And the dollar has just gone down, down, down ever since, right? So these were the macro trends that really changed how markets are working. What this means and why this matters is all of it relies on liquidity. And I've talked a lot about liquidity. So I've got the wrong chart up here. But liquidity is what drives markets. The more liquidity that comes into markets, the more risk assets go up. That's just how it works. When liquidity comes out of markets, that's when assets go down. And it's been this way since the financial crisis of 2008 when we reset interest rates. And so obviously during COVID, we had this massive spike in liquidity and assets just went nuts, right? And then what happened was, and right at the peak here, right, is when we started to see, oh, inflation starting to go up. We're going to start increasing interest rates. We're going to stop printing money. And so that rate of change of liquidity went down, right? We started to tighten. And so it went all the way down and down. This was the 2022 bear market. And then again, right at near the end of 2022 is when we saw the bottoming of this liquidity. That's when risk assets bottomed. And that's also when we started to see that next inflection point. So again, interest rates didn't change at this point. They didn't go down, but we saw that liquidity was starting to change because the rate of change went down. So we were raising them less. And that was that point at the end of 2022, why we saw that first jump. Now we're at the point here at the end of the year where we're almost positive in liquidity. And again, that's what's driving this next inflection point here at the end of the year. So it's all about liquidity. So moving into 2024, I expect this to go up really, really big as interest rates go down, we print more money. And so I think this goes as big, if not bigger, in 2024 or 2025. But the next point we're looking for is when does liquidity top out and head down? And that's when we want to get out of risk assets. But again, that's something we'll look at probably in 2024, more likely in 2025, could even be 2026. So we've got a lot of time on that side of things. So that's where we're at in terms of macro. The one thing I want to say is when you look at liquidity, it really is almost perfect. We have shown this chart a few times, and this is Bitcoin year-over-year percent change in price versus global M2, which is liquidity year-over-year change. And it has been almost perfect. So again, we saw the bottom of liquidity. It matched the bottom of Bitcoin. And liquidity has gone up globally, not necessarily in the US, but globally. And Bitcoin has followed that. And crypto is the same thing, right? And so these are the sort of things we need to be looking at. And it really allows you to understand where markets are heading. That is what led me to put out a report in October of this year. October 19th is when it went out. I put a message out in Discord a week before this because I had to actually write the report. So it took a little bit. But I said the stars are all aligning for markets. What I meant from that was macro was turning in terms of everything I just explained. On-chain activity was somewhat beginning to pick up, but price action was just starting to pick up as well. And sentiment was just like everyone hated markets, risk markets, especially crypto at this point. There was also a lot of lawsuits and things that came with the SEC through the summer. And so it was like sentiment was bad, but fundamentals in terms of markets looked really good. And I said, look, this is our moment. You need to allocate if you have not done so at the beginning of the year. This is the moment because they're about to go. And what happened? Well, Bitcoin absolutely took off since basically that moment, right? Here's October 19th. Bitcoin was sitting at 28,000. We are now sitting at it hit 44,000. So that's a massive jump in a matter of 2 months. And so really, again, it was all about those inflection points in macro. And if you understood that, you kind of could understand what's going on. If you're not a pro member, by the way, you need to be one, because I'm going to show you a couple more calls we did. And again, I don't get everything perfect by any means, but directionally, we can definitely get these things right when we're looking at these sort of indicators like liquidity and macro. And so that's why Bitcoin had its big run, was really the macro change was the big reason. Plus, of course, you have the Bitcoin ETF, but I don't think it's only that. And the reason I don't think that is because everything else went up too in crypto. And so that was the big driver. Okay. So the two things, the spot ETF and just the macro changes. Now, the next thing I want to talk about here is Solana. Obviously, 2023 has been the year of Solana. Let's go year to date. Solana started off the year around $8. It's currently sitting at $94. It almost hit $100 yesterday. It's the best trade that globally. There is no asset that has done better than Solana in 2023. It is up 844% on the year. Wild. Again, everyone thought markets were going to be bad. Everyone thought crypto specifically was going to be bad, but more than that, everyone thought Solana was going to be bad. And there's a theme I want you to understand of 2023, because when I get to the last part of this talking about Ethereum, you'll see the theme that I'm talking about. So first, everyone thought Bitcoin, crypto, it was going to go down. It was going to be a rough summer. Everyone hated risk markets. And when sentiment got the worst it had been in a long time, boom, it just shot up. Solana, same thing. That's the story of the year for Solana. Was at the beginning of the year, it was down to $8. FTX collapsed. Everyone said Solana was dead. The second pro report we have ever put out, the first one we put out was on Lens Protocol. The second one was on Solana. And what we said was, look, everyone's saying Solana is dead. Okay. It was all over Twitter. The first sentence here is, I don't know about you, but is Solana dead? Seems to be the question I'm seeing all over Twitter and in my inbox. Everyone was calling for Solana's death after being kind of the star asset in last cycle. And what I said was, you know what? To me, it looks like Solana's following in ETH's footsteps from 2018, which was everyone thought ETH was dead in 2018, but they had great technology. There were so many developers, a strong community. And if those people just continued to push forward, then I think it will have its big rally. And it's so oversold. And what happened? Well, obviously, over the year, Solana climbed a little bit. It went to about $20 for most of the year and just kind of chilled there. So it wasn't anything that special. Then what happened was I put out a call October 24th. So it was like, I said, hey, risk assets are going to go on. I put that call out 2 weeks prior, and Bitcoin started to lead that. But then what I saw was, you know what? In my prediction here of this pro report saying it's likely Solana follows ETH if they continue to build and ship new products. If they do that and on-chain activity stays somewhat relevant, then it should have its moment just like ETH did. Solana became the most hated asset. Everyone thought it was dead, etc. But what happened was people kept building. All of a sudden, there was talk of, Visa building on Solana. There was the launch of a bunch of different products. There was FireDancer coming out, which is going to make the TPS of Solana go to like 1.2 million. They just kept shipping and shipping and shipping. They had no more outages. They fixed so many things. And so I looked and said, okay, if markets go, Solana is going to be the one to go because it's the most oversold of all the assets that has the strongest or a strong fundamental, but it was just so oversold. And so what happened? On October 24th, I put out this call. And since then, Solana has gone from, October, from about $22 to $100 in 2 months. Again, when something has fundamentals, but it's just hated, the sentiment is so bad, everyone's calling for its death, that's generally the best time to buy. It's hard time to buy. It was a tough bet for me to say, hey, everyone, Solana is probably the play right here. Everyone was like, oh, it's Ethereum and L2s, right? Because it had the narrative at the time. And I was like, nah, I think Solana is going to really perform here. And boom, this thing actually absolutely took off. And it's because so many people were on the sidelines. You got to think of who's going to buy and who's selling. There was no one left to sell Solana. But when risk came on, everyone's like, oh, this thing still got fundamentals. It's still here. No one had sold. And so everyone had to rush in just to get a bit of an allocation. And that's why this thing just squeezed and went so big. The same was true with Bitcoin earlier as well. So that's the key sort of reasons for what's happened with Solana. Now, this thing has run like crazy. I still think it does well in 2024. I think it's got tons of room to run. I mean, we've 5x'd in a matter of 2 months, but it's still very far from its all-time highs last cycle. So I'll talk about what I think of Solana in next week's Market Watch. Again, we're just talking about the recap and sort of where we're at right now. So this brings me to Ethereum. We talked about Bitcoin, we talked about Solana, we understood the dynamics of what happened there. Risk was on. We always think of ETH as a more, beta play to Bitcoin, meaning it should go up more than Bitcoin. It has in bull markets anyway. It usually doesn't in bear markets, it goes down more typically. It held up pretty strong in the bear market, but we expected when risk comes back, ETH should outperform Bitcoin. And in fact, it has not at all. If we look year to date, Ethereum is 95%, whereas Bitcoin is 163% year to date. So quite a difference. Now, why? Why did that happen? Well, first of all, Bitcoin always leads these markets. So it always leads something like Ethereum in the beginning of the cycle. It did this last year too. I actually have a chart that I can show you. In last cycle, in 2020 is when the bull market kicked off and things went a little bit crazy. 2021 was the big year, but 2020 is when things got started. It's very similar to what we saw this year. And Bitcoin ran and ran and ran. And this thing went from like 8K-ish, something around there, up to, by the end of the year, I think it passed all-time highs, and it reached about 20K or so, 25K by the end of the year. And so it had a really, really good run. But Ethereum didn't move a ton at that point. It was kind of just lagging, as you can see in this chart here. So Bitcoin was the leader of all this. And then early on in 2021, when risk was really on, ETH just absolutely skyrocketed and went from $600 or $500 to $4,200 in a matter of months, like literally in like 3 months. That was just insane. And a lot of people were saying, Ethereum dead, Ethereum's not doing much, blah, blah, what's going on with Ethereum is all Bitcoin, Bitcoin, Bitcoin. And so I think the same dynamic is playing out today with Ethereum and Bitcoin. Bitcoin's leading, as it should be, but also you have the Bitcoin spot ETF. So you have a lot of people speculating on Bitcoin this year. And so Bitcoin did so much better, okay? Now, look at where we're at. My expectation was always, after that spot Bitcoin ETF, Ethereum should outperform. Even if it wasn't for ETFs, this would typically happen anyway, right? It's just sort of the flows of how it works in crypto. And so now we're at a stage where, well, Bitcoin performed well, Ethereum not so much, but Solana and other layer ones have done extremely well. They've outperformed Ethereum like crazy and Ethereum's L2s. And so that's led us to this moment where everyone's like, okay, Ethereum's dead. Ethereum's dead. And so you have Peter McCormick, who's a known Bitcoin maxi, who goes, remember ETH. And to me, and this was just yesterday, 2 days ago, to me, that signals a bottom. And I actually wrote that. You can see here, LO, you didn't learn from last cycle, bottom is soon in. And the reason I say this is last year when Bitcoin was skyrocketing, last cycle, when Bitcoin was skyrocketing, ETH was delayed, as I just showed in that image. Everyone had this, they had an actual ETH death party on Twitter. It was a Twitter Spaces, and a bunch of maxis came on, celebrated, and that marked the exact bottom of the ETH BTC, and then ETH just took off and completely blew apart Bitcoin, literally the day after they had that, which is really funny. And this again goes on to the sentiment. When everyone's calling something dead, that usually means people are on the sidelines of that asset. And as long as it has fundamentals, then all of a sudden this thing will rip faster than everyone imagines. And so when you see this remember ETH, and everyone on Twitter right now is saying ETH is dead, ETH is this old tech, Solana's so much better, blah, 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 blah. This is your sign of, okay, now is the time. And by the way, and I also have tons of people in our Discord saying, should I be selling my ETH for Solana? Solana just pumped 800%. ETH has still not had its move, even though fundamentally it is the strongest asset in this entire space. It's the only sustainable, profitable tokenomic structure in this space. And yet everyone's saying this thing's going to die. There are tens of thousands of developers, thousands of companies, private, public, non-crypto, crypto native. There are hundreds of thousands of investors, tens of thousands of validators, all incentivized for Ethereum to do well. Do you really think this thing's going to die? There's a 0% chance it dies because it has Lindy and network effects. I talk about this all the time. But when you have this many people that rely on it and are incentivized for it, they're going to ship products. They are going to do things to make this thing come back from its death, just like what happened to Solana and what always happens with the crypto industry every single cycle. And so when I look at, first of all, I want to just explain why I think ETH has been lagging so much. Other than the flow part, it should have probably done better. But the reason, and this is what I believe, is that Celsius, if you remember, is one of the lending platforms that went bankrupt last year. They have a bunch of ETH, and they have an opportunity. They've been allowed, given approval, to continue their Bitcoin mining operations to earn revenue, even in bankruptcy. And so what they're doing is, in order to facilitate buying enough mining equipment and other things, this new business opportunity they have, they need $250 million in cash to do this. And they happen to have that in ETH. And so over the last 30 to 45 days since November, which is the time that ETH has been lagging so much, they have been selling 8,000 to 10,000 ETH every single day. And it's still happening today. And in fact, they have sold, and this was in their filings as of December 19th, they had sold over 30 days, $243 million, okay, in ETH specifically. Now, they sold some other stuff, stablecoins, Link, Matic, AVAX, but small amounts. AVAX is 150,000. Who cares? Doesn't make a difference. But when you're selling $250 million of an asset over 30 days, that's huge. That would generally tank any other asset. But if the Ethereum not only held on, it actually continued to rise. Now, it was a small amount, right? It lagged everything else, but it continued to rise. So when Celsius is done selling, and I'm not sure if that's today or not, I've been trying to figure that out. I don't know yet, but I know it's coming soon. The last report I saw was if they sold all their ETH, which we don't know if they're going to do that, but if they sold it all, it would be done by January 14th if they continue on this trend of 8,000 to 10,000 ETH per day. And so either it's done now because they have enough to pay for the business they were running, or it finishes January 14th. Regardless, when that selling pressure is gone from Ethereum, there's just no way that this, as long as demand remains the same, that this asset doesn't just skyrocket. And so also the fact that you have so many people that just rotated out of Ethereum and into Solana and bought the tops of Solana, the local tops. I think Solana still has ways to go. But you have a bunch of people that are sidelined ETH. They're not buying it right now because it's lagging. You got a bunch of people that have been selling it because they think they're missing the pump elsewhere. These are the moments when something is so hated. These are the moments where you want to dive further into it and you want to buy. Just like I called with Solana before and the crypto industry previous to that, I think the same setup is happening on Ethereum. And so I think that's where we're at. And then in terms of catalysts, when we think of fundamentals, outside of course, Ethereum has all the tokenomic fundamentals. But I really want people to understand is that there's the Ethereum fundamentals, and then there's layer twos, which have also been completely shit on in the last few months. Everyone, again, is saying layer twos are useless. It's all about layer ones. And if you look at AVAX, Sol, Near, they've all done so well, whereas layer twos have not. And the one catalyst that I see that's coming also early next year, apart from the ETH ETF, which is so obvious, you're not getting an ETF in any of the other smaller assets. And so apart from that spot ETF coming, which is likely to be approved in May, we just had the announcement that EIP 4844, which is the upgrade to Ethereum that will lower the fees to L2 specifically for data. And so the gas fees for L2s are going to be lowered by an order of magnitude. And so if gas fees right now are 10 cents, they'll go down to 1 cent or lower. If they're 20 cents, they'll go down to 2 cents. So not as cheap as Solana still, but very, very negligible in terms of it being just 1 cent to transact across all L2s. Now, some are even cheaper than that. Some L2s are already at 1 cent, which means they'll go to 0.1 cent, right? So we're talking a massive, massive upgrade to Ethereum L2s. And so not only do I think Ethereum, the most hated asset right now, does really, really well in Q1, I also think that layer twos are set up to just absolutely explode. And woke up this morning as I go to record this, and this, I think the market might already be smelling this out. I mean, optimism is already up 30% today. Our Arbitrum is up 21%. Now, I wasn't expecting that as I recorded this, but hey, I guess I need to be quicker next time. But there's still plenty of room to run. And the reason I say that is if you look at the market cap of Optimism and Arbitrum, and remember, these are in direct competition to something like Solana and AVAX, right? You could think of these as the competition to L1s. And so, but Optimism and Arbitrum have more liquidity. Both of them have more liquidity than something like Solana and AVAX. They have similar users. They probably have more developers and more apps, maybe not than Solana, but close. They're very comparable. They at least have a lot more liquidity. And so the market caps of these, though, if you look at the fully diluted market caps of Optimism and Arbitrum, 12.7 billion and 13 billion between the two. Okay. If we go to Solana's market cap currently 52 fully diluted, 52 billion, and AVAX 19 billion. And so Avalanche isn't even close to as successful as arbitrage optimism for users, transactions, like all the things. It's nowhere even remotely close. So in my opinion, Optimism and Arbitrage should be actually higher in market cap than AVAX. Now, will it? I'm not sure, but they should be higher. And so I think that even by the end of December, we are going to see a massive run in LT tokens and in Ethereum. And so that's where I think we're at in markets right now, at least for 2023. Now, of course, moving into 2024, I've got a whole different scenario. So tune in next week. I'm going to dive into what I think is going to happen in markets next year for 2024. I'll talk again about macro. I'll talk about specific tokens and in the crypto market at large. A little teaser. I'm very, very bullish going into next year for many, many reasons. So I'll cover all of that. But regardless, one just tip, because I noticed this throughout the year so far, is you want to do the least amount of trades as possible, right? You want to be early in a trade, early in an investment, which is why we signaled at the beginning of the year, get in crypto, even if it's still a bit early, get in now. It's why we said Solana early on when it was dead. You want to get into those and just hold them. You don't want to be chasing pumps. And so right now, everyone has, wants to be selling their ETH and going into Solana. And I think that, or selling their L2 tokens going into Solana. And I think that that's not the play. The play is set your bags early on. You should have already had Solana. You should have already had Ethereum. You should already have LT tokens. We have been addressing this and writing pro reports on this since early days this year. And you want to just buy those and hold them. You don't want to be swapping from one tokens to another. Not only does this cause tax implications, but generally you're going to screw it up. And that's the big problem. So I don't trade much and I won't trade much for this entire couple years. You want to set your bags early. Now, if you have new cash, new fiat, then buy these tokens, but don't sell your other tokens as long as you have conviction in them. Something like Ethereum, it's crazy to sell that into something else when it becomes the most hated. That's the time you want to be actually buying more or just holding on if you already have some. So anyway, it's been an incredible year. Thanks to everyone that's been following along. I'm glad you guys are enjoying this Market Watch content. I'm going to continue to do this for you because obviously we just have such a big opportunity right now. And congrats to everyone who has been following along, that's been a pro member this entire time and has been listening to these calls. We're very grateful that I've been getting them right so far. I won't get everything right. That's just life and that's fine. But that's why we have sort of risk and we diversify our portfolios and we set ourselves up so that we don't get wrecked. If you're not a pro member, should be, because we have a bunch of different pro reports on how to pack your bags, how to set up your portfolio, when to sell, and tips throughout this cycle. So those that have taken pro know what I'm talking about here. If you don't yet, then in the show notes below, you can sign up to our newsletter and go pro. Otherwise, guys, congrats on a big year and looking forward to our journey in 2024. I'll see you guys next week. It'll be 2024 next week, which is just wild. So happy New Year to everyone. And I'll see you next week, and we'll cover what we're looking for in 2024. Thanks, friends, and take care.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.